For 2 years, European investors have been clinging to the hope that inflation would be transitory. We were promised the last mile, that final. We were promised easy descent from 3% to the 2% sanctuary. That would allow the ECB to cut rates and stimulate the economy. But, as we sit here in May 2026, that final mile has become a dead end. The wall labeled 3% CPI isn't just a number. It's a physical barrier. While the US has managed to decouple growth from inflation, Europe is hitting a brick wall. Why? Because our inflation isn't just about too much money chasing too few goods anymore, it's structural. The ongoing instability in the Middle East has turned energy from a commodity into a geopolitical weapon once again. For a Dutch investor, this isn't an abstract concept. It's the rising cost of heating greenhouses in Westland, and the ever-increasing price of petrol. The euro hitting this wall represents the failure of the traditional monetary toolkit. You cannot interest rate your way out of a broken energy supply or a fragmented global trade map. This collision tells us that the easy money era is not just over. It is being buried under a mountain of structural price increases. The impact is visceral. When the euro hits that wall, it signals to every investor in the eurozone that they should stop waiting for 2019 to return. That world is gone. The 3% wall is the new floor, and the mindset that survives is the one that stops fighting the wall and starts building above it. Frankfurt was supposed to be our anchor. A leaking dam with paper promises. The battle of mindsets begins here. It is the realization that the institutions that protected your wealth are now being structurally compromised. You cannot build a future on a foundation that is actively splitting apart. The reset isn't just about prices. It's about the end of the central bank put. You are on your own now. For half a century, the story of European wealth was the story of German industry. The process was simple and effective. Import cheap energy, engineer the world's finest machines, and export them to a global middle class hungry for status and precision. But that machine is now being dismantled. The tariff bomb, set to 25% and announced by Washington on the first trading day of May 2026, is the final act of a geopolitical drama that has now reached boiling point. This isn't a trade adjustment. It's an industrial execution. It is designed to force a choice: move your factories to the US, or be priced out of the world's most lucrative premium market. When you see that car being crushed, it's not just a loss of market capitalization that you're witnessing. It's the destruction of the old wealth pillar. These companies, BMW, Mercedes, and Volkswagen, are the bedrock of European pension funds and the safe anchors of the Dutch household portfolio. However, as the ticker bleeds red, dropping 3% in a single session, we must face the hard truth that a safe bet in a trade war is no longer safe. The vice is closing. On the one hand, the Buy American ethos has become a permanent bipartisan reality. On the other, China is no longer just a customer. It is a competitor that has already overtaken Europe in the race to develop battery-powered and AI-integrated vehicles. The crushed car is a metaphor for the European middle mindset. The belief that quality and engineering alone can save us. By 2026, engineering will be irrelevant if you can't get your product across a border, or if your energy costs are 300% higher. The wealth reset, requires us to recognize this change and accept that the export miracle era has transitioned into the industrial squeeze. Investors who remain loyal to the old giants are simply standing in the way of the hydraulic press. The 2026 Ultimate Wealth Reset will not be a single crash, but a great bifurcation. It is a division of the masses. On the left, we see the reactive mindset. These are investors who are still waiting for the 3% wall to crumble so they can return to 2019 levels. They are holding on to their legacy auto and chemical stocks, praying for a pivot that the ECB can no longer deliver. They are paralyzed by the cracks in the Eurotower and are hoping that the fortress will fix itself. This mindset is fragile and breaks when the world changes. On the right, we see the adaptive mindset. This is where the battle of mindsets is won. These investors aren't mourning the obsolete technology. They are investing in the Agentic AI that will manage the supply chains of the next decade. They aren't waiting for the ECB. They are moving their capital into the digital euro and decentralized energy projects in the Nordic countries. In the Netherlands, this division is evident in real time. DNB figures show household investments reaching record highs of over 200 billion euros, yet much of this remains in legacy structures. The adaptive investor knows that in 2026, wealth will no longer be about owning the machine, but about owning the intelligence that runs it. The reset acts as a filter. It will filter out those anchored to the physical geography of a stagnating Europe, rewarding those anchored to the digital geography of the future. Wealth isn't disappearing. It's simply moving from the industrial past to the intelligent future. We conclude with a vision of the new world. The cracks in the Eurotower did not mark the end of the story. They signaled the birth of a new system. The Wealth Reset invites you to stop being a passenger in a failing industrial machine and start building your own resilience. The 3% wall was necessary. It was the only thing that could prevent us from continuing on a path of debt-fueled stagnation. The tariff bomb was also necessary. It forced us to innovate beyond the legacy of the 20th century. As a European investor in 2026, your battle of mindsets will end when you stop viewing the collision as a tragedy and start viewing it as a clearance sale on the old world. We are building a new global, fluid architecture of wealth that is fortified against the very shocks we've discussed today. The wall has been hit. The building is cracked. The bomb has detonated. Now we rebuild. This is Jenny Insights. Money in Mind. Welcome to the Reset.